Hi friends, this is Anuj Singhal. Everyone, I hope that you had a good weekend. Sunday evening is of course left, so some of you might be enjoying that as well. But of course, tomorrow morning we have a very interesting day coming up. So I'll just post this address of this YouTube live to my Twitter and Telegram so that it's easier for everyone, to come and join. That becomes a bit easier. Here it is. Let me just yeah, there it is. So yeah, there we are. So all of you, thank you so much for joining in on a Sunday evening. I normally do it on a Sunday because it gives me an opportunity to look at the weekend news, to look at the U.S. market, and then you can take a more informed decision. And in general, I've noticed many times that I may have some completely different thought process on a Friday, but by the time the weekend comes, and you've had a chance to sort of cool off a little bit, perhaps enjoy a little bit. After that, you you start to think slightly differently, and at times it works. So the issue that I have is, you will remember the point I was making that the market action, the way it was surging in the last hour on Friday, but the futures were not, was indicating of some kind of near-term peak for the index. Uh, Also, with all the rumors, all the buzz about what's happening, I think that sort of a lot of people are wondering whether indeed the market just ran up a bit too much. I mean, the Nifty futures, for example, was up 66 points, while the spot was up 90 points. The Bank Nifty future was up 69 points, while the spot was up 127 points. Then I thought about, why could that be? Is it because there's just too much disbelief in this rally? Is it because too many people have missed out on this rally? Is it because it's now fashionable to just say that this is a sell on rally market and that is why, people are doing that? That is a possibility. That is a large probability as well. But I think what I am going to now think about is what's going to happen tomorrow, of course. So, for starters, and if the US market, well, once again, they had a decent session on Friday and the SGX closed at 95.56, which compared to the futures closing is indicating a decent gap of about 50-60 points. But then, that's the difference between spot and the futures. So I think what we have here is I always give, importance to the first day high or low after a trending expiry. So we had a decent expiry. After that, the market sort of didn't start halt yesterday or on Friday. So the Friday high on the spot is 95.99. 95.80 is where we close. So 95.99 is the high, and the low is 93.77 on the Nifty. I think what perhaps you know you may want to see. No, dividend is a factor. Dividend is a factor for discount, but it should not be that much factor. So I think what you do is if early in the morning tomorrow you are taking out Friday's high, then the first day high doesn't become that remain that relevant. And in that case, the trade that becomes sacrosanct for you, and purely from a positional trade point of view, is just see if this rally extends to 10,000. That is where we peaked out last time. It's fairly possible that the market may want to do that. Now you'll remember even up 2008, in the bear market that we had, there was one rally market almost towards the 200-day moving. After that, we had the second decline. Now, the issue with this market is that if you look at the 200-day moving average on the Nifty, it's way off. I think the 200-day moving average comes into at around 1,000, at 9,500. So I'm not saying that we make it dash to 11,000. On the Bank Nifty, we are at 19,300. It was a fashionable trade to sell Bank Nifty. I myself have said many times that the Bank Nifty runs the risk of going back to 52-week low. I still maintain that it does. But in the interim, can it have a big rally? The 200-day moving average is 27,000, 8,000 points away from here. The short point I'm trying to make here is that with so much disbelief in the rally and with the economy opening up a bit, though Mumbai is still not opening up, in Mumbai there's almost status quo. There's some opening up, but not to the same extent as the rest of the country. So, with Unlock 1, I think my sense is, and with the earning season having gone past, and the market now having discounted that this was a washout earning season, or the next quarter is going to be washout earnings quarter, the market may start to look forward. And in that, my sense is that tomorrow onwards, this merit, especially with Nifty futures and the bank Nifty futures being at so much discount, of some more short covering. Now, one more reason I was just looking at the FII data. There's been a lot of long futures unwinding in the index futures. 65,000 contracts is a net long position now from 76,000. It came down by 11,000 contracts. Options data is all over the place. There's been almost equal build-up in option long, put short, call short also. So I think in that the jury is still out on what's happening. So the sense I have is that the basic trade for this market perhaps still is buy on dips, and you got a beautiful stop loss, which is the first day low of the series, which is 93.77 on the Nifty. On the Nifty spot, 93.77 as your stop, and see how long this rally lasts. Similarly, on the Bank Nifty, that would work out to 18,730 on the spot level, roughly about 600 points on the Bank Nifty for the positional trader, and roughly about 200 points on the Nifty, 200, 600. I think that's a fairly decent risk reward if you're playing for another 600 point rally on the Nifty and another 2000 point rally on the Bank Nifty. Bank Nifty's highs have been 21,000 something. Nifty's high has been closer to 10,000. So if the market tries this once again in the month of June, this is what the market might attempt to. So that I think is my base case. If you start to break the lows, I think in that case, perhaps the market, we will revisit that. But as of now, that is my basic understanding and my basic trade setup that I will present tomorrow morning as well. But I see no reason to change that. You will hear me say the same thing tomorrow morning. That as of now, that's the risk reward trade. The other thing which stands out, and I was having this discussion with some really wise people about what's happening, is that there's a lot of fund flows which have started. Now I dismiss the Thursday number as expiry factor. There's no way you can dismiss the Friday number. And you know what? I'll do one more thing. Normally, markets have biggest rallies when the futures are at discount because there's a disbelief in the system. Futures discount means two things. A, there's heavy shorting going on, and B, there's so much of delivery based buying happening in the cash market stocks that it's not getting reflected in the futures. It's a combination of both. If you see the FI data, even on Friday, there's been a buying of about 1460 crores. DIs are what about 900 crores. So the have is, and if you look at the delivery numbers of some of the big names, I was just looking at the delivery numbers, for example, of an HDFC Bank. HDFC Bank was 1,000 crore, HDFC was 1,100 crores, ITC was 300 crores, Bajaj Finance was 400 crores, Larsen and Tubro was, I think, some 350 crores. What else? Hero Motor was 150 crores. That's also a big number for a stock like Hero Motor Corp. UPL was three. Achha, also, one more thing which has started to happen is, if you notice, IT has started to underperform. Banks have started to rally once again. That's again indicating perhaps some kind of risk on which might be coming back in the market. Also, if you look at what's happened to the mid cap index, I think the mid cap index has for the month actually cut its losses to just about 1.7%. The Nifty was still down 2.8%, the Nifty Bank was down 10%, but the mid cap index cut its losses to just about 1.8%. The Nifty Junior almost ended in the green for the month. I think all of that is giving me the confidence and we'll keep an eye on the advanced decline that is looking good. I think all of that is giving me confidence that this is now a buy on dips market, unless market texture changes, which would be if you start to take out the first day low. So now instead of first day high being your stop loss to try an adventurous short trade, I think first day low becomes your sacrosanct number on the way down to perhaps trial, and see how long this rally lasts. That I think is going to be the important parameter from here on. I think that is my base case. Also, what's noticeable is you would have noticed that the domestic economy stocks all of a sudden are beginning to do remarkably well. Whether it's Larsen and Toubro, NCC, Voltas, Havells, V-Guard, all these cement stocks, all the auto stocks, two-wheeler stocks in particular. I think the market is looking at the theme of post-lockdown, what happens, and whether there's going to be so much pent-up demand which is going to come back. I think there's going to be revenge buying. I do not agree with this view that there's going to be no revenge buying. I think there will be revenge buying. So let us see. Uh, So now that is the whole point that I thought I will make. I think the weekend has made me slightly more positive on the market than I was on Friday. On Friday, you'll remember, you'll remember that this rally that we caught the bottom of it on Wednesday, when I said that this is, I mean, you know, one of my great, most respected veterans of the market, one who I even consider a mentor, called me to say that अनुज तेरी जुबान पे आज सरस्वती बैठी थी जब वेडनेसडे को when we, at 10 a.m. we said that okay, this is the place from where the market will have a big rally. So I mean, if you got in there, I think you have no worries. Then so you're sorted in life. But I am, because a lot of our audience is day trader audience. There's nothing wrong in that. I have a lot of respect for day traders because they provide a lot of liquidity to the market, and at the end of the day, they take a lot of risks. So I respect them a lot. Uh, Positional trader also takes a big risk in terms of keeping the positions open. So both kind of traders exist in the market. So I think what's very clear is that those who have been having long positions since Wednesday, they have absolutely no need to worry. They just have to now manage. They just have to trail the stop loss 100 points every time the market moves up 100 points. That is all that they got to do. But what about those who want to enter now? I think that is the crux. I think in that, as I'm saying, perhaps you want to try your luck on that. What you can do is also perhaps uh, use the monthly options. Uh, Try to buy and hedge via, just to prepare yourself from a very bad event, perhaps a deep out of the money put. But that is, only if you want to hedge. My sense is that, this is a market where there's a lot of upside now because the market's gone through some real crunching lows. The market has not broken lows. If it had to break lows, it would have. I think there's everyone who kept saying this is a suckers rally, this is a bear market rally, which might well be the case. But within that, there's scope for the market to perhaps move up from here. Just trap some people on the short side, and even if it has to fall after that, it can do that. But before that, I think it will move up quite a bit. I just want to, I'm just loading something on my screen, so that's why I'm just going back to different screens as well. Uh, yeah, Warren Buffett is not buying; it's his choice, Aditya. If you keep buying or selling according to what Warren Buffett does, I think that's not a great strategy. So PSU banks is a punt. You want to take a punt, it can go in your favor, it can go against you. That's the call that you need to take. I mean, I am not in that camp, but there's been a lot of buzz about what's happening. So let's see. The other interesting thing is that if you see on the option side, there's been some very aggressive put selling at 9200, 9000, 9500 even, and 9400. And if you look at the calls data, 9700 call added a lot of open interest on Friday, and there the premium was up quite a bit. 51% uptick on premium is a big uptick. It's a buying. It's not selling. It's mostly buying. I think even that 10,000 call is seeing build up. So I think this market is playing for some kind of an upside. That's very clearly visible. I think smart money is positioning itself for a big rally. 9,700 is definitely on, and perhaps even higher levels are on right now. And then we will take it forward. I think pharma perhaps takes a bit of a backseat for some time because it's become a consensus overbought trade. You'll remember the point I made on Bharti. I kept saying Bharti is a great trade. Bharti is a great trade. Then it went to 600, great results. Everyone went long, and I made the point that now it's overcrowded. Perhaps you want to, get out here and come back later, and boom, came that block deal in which promoters sold. So similar thing is happening with pharma. I think pharma has become slightly overbought in the near term. So perhaps there's some profit taking, and banks are making a bit of a comeback. So that's why I think the banks perhaps could be trading as a career PK. I don't know. I mean, a lot of people have successfully done it. But I tell you one thing: there's I'm not going to discourage you, but there's 1% people who make it. If you have a belief in yourself that you are in that 1%, then by all means go for it. Also, a lot of this is mental, psychological in nature. It's not about your technical skills or about your derivative skills or fundamental skills. A lot of this is about your mental strength. If you think you have that mental strength, by all means, you can do it. Has ITC now bottomed out? I think ITC is clearly showing signs of that. There's massive buying in ITC. And I think from 140, the way it rallied, and even on bad news, it would rally. I think the index that I invest in, Varun, is normally Junior Bs, the Nifty Junior ETF, because for me that works. That has worked for me. So I always, uh, keep doing that. So that is what I do. Okay. So anyway, ladies and gentlemen, thank you so much for tuning in on a Sunday. I genuinely think that what I'm saying is with utmost confidence and with utmost gut feeling. If I'm wrong, I'm wrong. But I think don't look at the market rally from what we sometimes make mistake is look in the rear view and say that I didn't buy at 7,500. Oh, I didn't buy at 8,500. Oh, I didn't buy at 9,000. So what? If the market is going to 10,000 or 10,500, then even 9,500 is a good place to buy. And like with everything, have your stop losses in place, have your risk management in place, and then India China issue. I think India China border issue has been there for last many years now. It's going to remain. We are the unfortunate country where we are surrounded by two very hostile neighbors, both on our east and on our west. Unfortunately, that is life. So we have to accept it. Uh, Luckily, in the south we have just the sea, so that's why. But that's how things are. You have to take it with you can't help it. So enjoy your Sunday, whatever is left of it in the evening, and then of course we will talk tomorrow morning. But thank you so much for tuning in. It was fun.